Good morning, ladies and gentlemen. Pleasure to be here as the moderator of the first panel. So without much ado, why don't I invite our esteemed panelists. Our first panelist is someone who doesn't need an introduction, someone who actually has had a very illustrious career in, and someone who we all look up to as a very senior banker, the former CEO, Group COO of ADIB, and he was also actually the COO of Mashrak and the Commercial Bank of Qatar before this. And prior to that, he was the CIO of Barclays, Morgan Stanley in UK, and also the CTO of Citibank amongst various countries, US, UK, Singapore, and India. Put your hands together to invite Mr. Sandeep Chouhan. Our second panelist is the MD and CEO of Expleo Solutions, Balaji Viswanathan. Balaji started his career with HSBC, stint at HDFC Bank, MasterCard International, and also a senior director at FS Delivery for Concentrix. Welcome, Balaji. Our third panelist, Ivan Van Bladel. Ivan is the director and for partners and alliances at Temenos for MEA and APAC. Ivan actually has also been a career of 30 years with various countries, and looking forward to a very interesting discussion today, Ivan. Thank you. So after that interesting presentation by Chetan, I think we're all still consuming a lot of data that got presented. But without necessarily going into a lot of those data elements, and we would like to actually have a little more, let's say, a strategic outlook, particularly on digital banking, and there's been a lot happening, not only in the UAE, but in the GCC. So maybe I'll start with you, Sandeep, and if you could actually help, just give a perspective. You've seen banks in the region, you've seen, what's happening across multiple markets. So if you had to actually look at what the advent of digital has meant to banks, and more importantly to customers, both institutional and individual, how would you articulate your thoughts on that?
Sure. Assalamu alaikum and good morning. Thank you. I think Chetan gave a very, very good summary of the state of affairs out there. So I don't mean to repeat that, and this is a very experienced set of professionals here who are already living and swimming in that space. But to Ram's question on the GCC context, I'd like to just share with you what will happen here is no different from largely what is happening in the world that we live globally. And if you just look at the financial services banking sector in the last 2 years, it is no surprise that this sector has grown by almost 200%. So that's great news. But there is a problem. The incumbent banks have grown only by 65%. So the lion's share of growth has gone to the disruptors. And there is a tipping point after which, the absolute numbers materiality. You'll be probably aware, PayPal market cap exceeds JP Morgan Chase. That is the world we are in today. And I make these opening remarks to try and shake us, conventional bankers, to wake up to the forces in play around us. And, the transformation that these incumbent banks need to go through is something that needs to be given some very serious thought. And I guess Cedar and others have a fairly good understanding of what that secret sauce and blueprint is. But I would urge you all to begin to look at a completely different transformation blueprint from what you have looked at so far. Coming back to to Ram's question around what have we seen in the institutional side and the individual side. The institutional side, and we've got some great transaction bankers here, but the institutional side, transaction banking was always, digitally, electronically run business. Trade finance has seen a plethora of new people who have come in. The intermediaries have shown up. Treasury-related transformation technology providers have started to come. So, and analytics in the institutional side has become, to the treasurers, has become way, way more relevant than just being able to perform the transaction. And I just take the example of the treasurer because the treasurer is the same person who consumes banking on an individual basis on a click on their phone and are demanding that same experience and expectations back on the corporate and institutional side. While the journey in institutional is relatively slower, in our market, I would say, a similar presentation as Chetan gave, if he was to produce to you a global map of happening on the institutional side, you'll be blown away as to how much investment is going into developing and maturing that sector. On the individual side, we are all consumers of those services. It would be fair to say that we all understand the power of instant, we all understand the power of, personalization and so on and so forth. But the two things I would still like to point out that are not as visible. And that is the growth piece that I spoke about earlier, that there is someone else who is eating the lunch of the incumbent banks, and they are winning because they are providing not just what is called as customer experience, but they are solving for core needs. So the very famous examples around Alibaba and more recently around State Bank of India and many others who solve core needs. So the customer's core needs as individuals is going on a holiday, buying a house, and planning for children's education. Providers who are solving the core need, and somewhere within that core need there is an element of financial activity involved, are the people who are eating away these transactions. So payments business has moved away from banks, lending is moving away from banks, investing is moving away from banks because these are being solved on a very intelligent basis, and I don't think the banks are recognizing. They are coming to the piece, but still are looking at themselves transactionally, whereas the competition is solving much more what is called as a, I'm using the word core need as against end-to-end, because again, end-to-end gets misunderstood as front office, back office. So yeah, I'd say those are some of the trends, the global trends that are playing out in our world. Thank you.
Very, very interesting, Sandeep. Those who actually are addressing the core need, identifying and addressing what that need is, and making sure the customer is happy are clearly the winners and taking away the lion's share. And that brings me to a very important question for you, Balaji. I mean, Sandeep talked about addressing customer needs, right? And obviously, in the digital world, it's all about customer touch points and customer experience, right? And I know you have been working with a lot of banks around the world in dealing with digitizing their processes and addressing customer needs. So if you were to actually have a view on how this whole aspect of customer experience is likely to unfold from a short to medium term standpoint, what would your view be?
Okay, thanks once again, and good morning, everybody. Ram, the way I look at it, taking the cue from what Sandeep mentioned, GCC is, as much as what we say it's connected to the world, it also has a flavor of a combination, because the workforce or the people who are living in this particular geography, depending upon each country, anywhere between 80% to 85% of the people are actually expats. This market has to cater to not just what is required in this market, but also keep the trend with what is actually happening across the globe, depending upon which geography the people come from. And given that and the frictionless experience which everybody is looking for, as much as we say fintechs are eating up some part of the banking portfolio, they are also enabling the banks to fulfill some of the needs which they are not able to do themselves. There are some limitations, and most of the limitations in the way we look at it, or from what we have seen in other markets, is what is the limited capacity of our own thinking process. We think it's a limitation, but actually it may not be a limitation at all. We try and interpret the regulations, we try and interpret the customer experiences the way we want it. Or some of our gray hairs actually probably is a limitation there rather than the enablers. And that's where I think whether it's what Mashrak has done here, or what SBI is trying to do, or what NPCI is trying to do in India, or what some of these Revolut and Scully and many other platforms which are trying to revolutionize how you look at banking and how you bring in the open banking standards, are actually redefining some of these elements. And if I were to look at what we have seen in other parts of the market, which are probably like what Chetan mentioned, India is probably ahead in payments, but at the same time, if you were to look at the entire lending and the kind of institutional banking, like what Sandeep mentioned, probably they're far behind. It's the question of how do you make sure that what you see in some part of the world, how do you make sure that that best practices actually spread out to the other markets? And that's where we see a big opportunity for players like us, and also the expertise that we can actually bring in of what's happening in institutional banking in probably UK and Europe and in the US, to what's happening in this part of the world. And what is happening in the payments and in the fintechs and the revolution that we are seeing in terms of the ubiquitous payments and the kind of frictionless experience that the customers are looking for, which is happening in this market, to the Western world, where we are still talking about ACH, we are still talking about cards physically, and still don't have a very secured way of payment. We still have the amount of frauds that are actually happening on the retail payments because of the lack of security. Those experiences into the Western world, and that's how we see the market evolving, and that's how we see people like us and the technology providers, partnering with the banks and the fintechs to bring in that revolution. And of course, in this market, the biggest element is we all talk about people like us, but there is a significant amount of blue-collar workers and the financial inclusion piece, which Chetan also covered. And how do we make sure that the financial inclusion experience of what happens in India and Africa and other markets to also cater to this market. Because the bottom of the pyramid, as we all know, based on what we have seen in the last 25, 30 years of our experience, that seems to be the most profitable and probably less demanding than what you see as the high net worth customers as well. So there isn't really too much of difference in terms of how do you need to approach. Of course, the scale will be different, the way you approach will be different, but that's another profitable segment.
Interesting. So basically, this almost sounds like arbitrage of customer experience across markets.
Absolutely, absolutely, and that's what the customers want as well, because the customer experience is going to be the key, and that's going to drive whether it's the banks who are providing that customer experience or whether it's the fintechs which are providing that customer experience. Once again, taking clue from what Sandeep mentioned, I could be sitting and doing a corporate banking transaction to make a payment in Philippines or in Dubai. But I know that how I make my payment as an individual, and if my experience as an individual and my experience as an authorized signatory in a institution is going to be too different, and if it's going to have so much of restrictions, I'm going to be frustrated. So that's the kind of experience that we need to bring into the customers. So
success stories in one market actually getting transferred to other markets. That's
Absolutely.
Really very interesting, and that takes me to a question to you, Ivan. We are talking about driving quote-unquote next-gen banking here, right? Next-gen is defined maybe differently in different markets depending on, like what Balaji explained, where you are right now and where you're heading towards. But you've obviously been operating across markets. You've been talking to bankers, in various markets. And if you had to, put a finger to how the strategic direction that banks are taking from a next-gen standpoint, right? In terms of both from a technology investment standpoint and let's say how directionally, there is a strategic orientation that banks are taking. How would you look at that?
Good morning. Thanks for inviting me. When I was asked to come and talk about digital banking, NextGen Banking, it's really exciting because that's what we breathe and live every day at Temenos. So NextGen Banking, digital banking is happening everywhere. And for me, it's really an answer to the problem between customer expectations and what banks have and can do. Social media, the way our children are using tech is 1,000 miles an hour over there. And in the end, we still consume the same products in banks. It's just the way they want to be consumed, and I think Sandeep touched on it as well. Nobody wakes up in the morning and says, oh, I'm going to go to the bank and open a bank account, right? People want to live their lives, want to go eat, buy goods, and have a very easy way to have a banking service plugged into that, embedded banking. And the digital banks are really plugging that hole because the traditional banks struggle with linking the different departments they have, the different products they have, into something that actually can be consumed on the go with one click, right? And if you think about it, if you know somebody that has a personal banker looking after him, they don't need digital banks, they don't need neobanks, because that guy or that lady will do everything that they expect. They will link the departments, they will run between different silos in the bank, they will procure the additional documents you need, they maybe even help you with other services. So why would you need digital banks? But it's impossible to provide private bankers or relationship managers to everybody. So doing it through technology is actually the answer, because you can do it in high volumes and you can do it in very, very efficient ways in a very complex environment. And that's what these banks do. They just step in and say, forget about your bank, yeah? We're going to allow you to buy now, pay later, like PayPal is doing. PayPal is running Temenos, buy now, pay later. Nobody wants to go to their bank when they want to buy a watch or a laptop and negotiate installments over 3 months. An airline, when you buy a ticket and says at the end, you want to pay with your credit card, you want to pay with another means, or shall we just defer your payments for 3 months for free? Just click here. That's what people want. And if you would go to a traditional bank, These products exist. It's just that the processes in there, the silos of software just doesn't allow that fast operations. It will take time, and that time is not available because you're checking out your product. So it's really exciting to see that what these neobanks are trying to do is the same that banks have been doing for everywhere, for always, yeah, that's the word there. But making it easy to do, and then they consume more, and your cost base reduces, and your fees goes up, and they don't care. You happily pay. I think is it Twitter now that wants to have, a payment monthly to. If you get value in return, and if you use Twitter, 10 times a day, you don't care paying $20, right? It's the convenience, I think, that digital banks bring you. And I was actually shocked, Sandeep, when you said that they do 200% growth and traditional banks do only 50 or 60. They sell the same products. They just take it from you and do it in a better way. You talked about, I think your colleague at the start, I'm talking too long, I'm sorry, just interrupt me, said platform banking. They just consume what other banks are investing in because that's easier to put forward and give it to people.
So it's all about convenience.
It's convenience. It's convenience, and people pay for convenience.
I can't agree more. I guess ultimately NextGen Banking is about having more options and also about convenience. But you actually touched about products, and I want to bring that back to you, Sandeep. One of the things that we always see is every transformation has downstream implication, right? And could be good or bad. But I guess there are implications that banks, particularly large banks, when they go through these large transformations, well, enabling technology is one part of it, but it has its implications on products, on people, and the processes, right? The 3 Ps. How would you see, this impact for bankers, and there are a lot of bankers in the room? How do you see this actually, when somebody goes through this transformation? How does one look at what ought to be thought through, and how does one preempt a lot of these disruptions from actually being, not being fully leveraged yet?
So, talking of the inside of the bank, right? So we've spoken about customer experience, which is the outside. I think one of the key takeaways in Chetan's presentation was cost. We can speak endlessly about growth and everything else, but moment we start looking at the inside of the bank, the cost conversation always comes back. So when we are looking at product, people, technology, I would say the digital era is offering, really for the first time, some very sophisticated way to address the efficiency problem. Because if you have 2 parallel worlds, you're building out, you have your existing world and you go create a digital world, then now you're sitting with 2 cost structures and you're sitting with, double set of people and so on and so forth. So you have to find a way to digitize the core, right? The main engine. So AI, data, cloud, and cyber security, these are the building blocks that banks need to very significantly up their understanding and implementation of. If you want to optimize the internal engine on how you manufacture products, how you do the fulfillment via the teams, the process engineering required to deliver that service, you've got to take on these new technology tools that are now available. And again, the good news is there are a lot of fintechs which are developing point solutions around AI and data and so on and so forth, which needs to be appropriately selected and stitched into the main blueprint or the architecture of the organization. Thank you.
Very interesting, Sandeep. So ACCD, as I see, AI, cloud, cybersecurity, and data. So I guess the four.
It's actually, it's ABCDE, where A is for AI, B is for big data, C is for cloud, D is for devices, and E is for ecosystems. So it's a very, if you can get that, and you can play the alphabet game as much as you like. But fundamentally, I don't think the banks here in the region have understood the power that AI can unleash on both the revenue side, on the products, as well as on the cost side in terms of delivering a very, very optimized operation.
Cost.
Yeah.
No, very, very interesting takeaways, Sandeep. I mean, beyond the A, B, C, D, E, I guess the fact that the jaws are actually a function of revenue and products and efficiency and cost, right? And I guess, as someone, and if go to Balaji on this, one of the areas that we always see is that your cost is a function really of, how well you execute what you're executing, right? And ensuring quality becomes a critical factor in that execution as well. And going back to the, the A, B, C, D, E analogy, the ecosystem, factor, the E factor is so critical that it's not about just one application. It's about actually being, having an ability to have sustained quality across all areas, right? Your experience, Balaji, from, what you have seen in this space, both what works well and what doesn't work well.
The way we have seen, or at least based on our experience, both positives and negatives, I would say, as much as we talk about technology, as much as we talk about transformation, more often than not, what we do is we actually start midway rather than trying and starting from the foundation. That's what we have seen as an experience in most of the places. We start with going into a product and going into a solution before we understand what the problem statements are and what the basics foundations are. In most of the cases, what we have seen is, including what Ivan mentioned, there are silos. And we don't see a customer as one customer. For example, if I were to look at my own experience as well, I'm not looked at as one customer by my own bank. I'm a credit card customer, I'm a savings account customer, I'm a corporate customer, I'm a commercial card customer, but I'm not one single customer. I don't get the same kind of experience, across all the channels and across all the services. And that's primarily because the bank has not been able to identify me as the same individual across each one of those systems. And the foundational layer for that is like what Sandeep mentioned. For something to do with an AI, you need to first have data. And for that data, you need to make sure that you're able to, get to that level of elucidation that I can understand, identify, somebody as one individual across multiple products or across multiple channels. And we still have our corporate banking system separately, our retail banking system separately. And that's where the fintechs actually come into play and make that difference, because they know what the problem that they want to solve, and they are able to identify what is the challenge with somebody like Balaji and try and make sure that they actually identify the solution for that. And end of the day, they deliver, like what Ivan mentioned, they deliver those services on a banking platform. Just that, the front end is, through a fintech. And it's, in my opinion, it's actually a good change, because not everything can be done by a bank. And that's where the question of how do you make sure that what part of your customer ownership you are ready to part with somebody else, and what part of the customer ownership you want to keep it with yourself. And end of the day, all of us are in the business to make money, right? So if you were to look at the fintechs, just some statistics which I saw yesterday, in UAE, we had probably 30 odd fintechs in 2017. Now the registered fintechs are 465. So that's, if you were to look at it, that's the kind of solution that they are trying to solve. And they are, if you have a 10 million customer base in UAE, and probably a 60 million customer base across all the GCC countries. They are ready to look at customer base with 100,000 or 200,000. While as banks, traditional banks, we always look at saying that what first the limitations are, and then try and go and figure out how do we work with those limitations.
So again, customer to the forefront. Everything is sort of boiling around the customer, and I think
end of the day, that's what it is. He's the consumer of your services, and he's the one who's paying for whatever we are doing. So end of the day, it has to be centered around what the customer wants.
And if I can take that to you, Ivan, I think there is, Balaji talked about the silo of various systems in banks. And that the consequence of which is that you don't necessarily identify a customer to be a single entity. You see them as subparts, be it a corporate or a retail or a commercial, or you see each customer individually. And, Sanjeev talked earlier about, how we had universal banking come in play. And, remember 20 years back, we actually had, evolved from actually being from what could be ledger posting machines in branches to what could actually be universal banking. And the whole idea was to actually create a consolidated view and not look at branches as banks, but look at branches as an extension of the same bank. And again, going back to the consolidation of customers, we've come a long way, right? Now, to the point about having customer centricity, vis-a-vis having this point solutions that are specialized for that particular customer that is enabled by fintech, where in this do you find the balance? I mean, obviously as a bank, you have to address multiple priorities, right? And as a technologist, you obviously have seen these challenges come up again in various contexts. So how does one strike a balance there?
Complicated question. I'll come back to costs and ecosystem. From indeed having been active in many geographical locations, what I have seen is that things that are cutting edge somewhere may be already obsolete somewhere else. And learning from what other regions are doing, you can really jumpstart the evolution in your own place where you're operating. And I think you need to really try to see what is available already instead of reinvent. And when you then come to do that, then you can look at your cost and fintech, everything that the end users need, and that's what pays for the bank, is the end users, the consumer. Also for corporates, I'm not saying that they're not end users. They want your service, they will pay for your service, so you need to be able to do it faster, quicker, and more cost efficient. And when you look at the ecosystem around us, there's so many companies that can do things so much better, faster, and cheaper than ourselves. Although we are a massive provider of solutions, we love fintechs because they move fast, they're cheap, they are spot on, with what the consumer wants, what the sector wants. We don't need to pay them. They come to us, they deliver you a service maybe on a fee base, and they can change all the time dynamically. So you don't need to do that yourself. Something even for us to develop, and we have 1,200 modules. To develop a new module takes 10 or 20 times longer than a fintech, something brand new that is going to be relevant. So ecosystem is really, really important for us. And also for the partners. So we believe we develop tech so that it's available, but then we have our partners deploy it. Our partners like Cedar or delivery partners deploy it in a way that it's in harmony with the bank's own business plan. So, but again, coming back to the international factor, try to see how it's being done somewhere else. If you go to Philippines or you go to China, the way they do payments, the way they do transactional banking is light years ahead, but it's not here, and it's wrong. We should look at it and see, how do they do it? Oh, this is smart. Of course, we have regulations that hold us back, but then we work with consultancy firms, with the regulator to try to evolve them, right, as well. So, yeah, I think maybe a roundabout answer to your question, but
I think that was very well articulated. I think the theme, going back to what was mentioned earlier, is bring in the best practices from around the world and actually arbitrage, as Balaji explained. We'll open up for questions to the audience in a minute, but if I may ask you, Sandeep, there are, and this the theme that was talked about here on bringing in the best practices from around the world, right? And there was also the construct of the regulation of the market, the customer expectations that actually may be unique to that market. You've obviously been a banker and you've seen various markets. How much of this do you see as uniformity versus the diversity? I mean, is there a distinction that you draw there?
See, there is some uniformity emerging. My advice to everyone here would be, go develop your transformation blueprint. You must have a blueprint. If you don't have a blueprint, you will continuously keep tweaking, because there is something clever and interesting happening every hour, and there's a new fintech that will come and confuse the hell out of you. Now that blueprint has to have a few fundamental elements that I'd like to share. The first one has to be around what has been spoken is the customer core need. Not customer experience alone, the core need. When it comes to experience, we are all customers, we only care about one thing, and that is instant gratification. That's it. I've asked you to move my money, move it. I've asked for a loan, give it to me. But banking has become a service, it's a utility, and hence everybody's calling themselves banking as a service platforms. So the transactional aspect is a very tiny part of that. So that's the second part of the blueprint. The third part of your blueprint is this fintech collaboration, because that's the crucible of innovation. The innovation is taking place there, and you need to find a way to be that magnet that the best fintechs want to come work with you, but they will come work with you if you do not frustrate them with your, procurement processes, regulatory demands, and so on and so forth, because they operate to a very different rhythm. And the reason they are not coming is because we are not solving for that. We like them, we are very attracted to what the fintechs have to offer, but we don't know how to dance with them. And the people, the other ecosystem players, so the beauty is the telecom player doesn't understand the complexities of banking, and he can go to dance with a fintech player who moves payments quickly and overnight is in play. So you've got to reinvent in your blueprint, you need to find a way to reinvent that. And I'll make the final point that these transformations, and Sanjeev and his team will tell you, will only succeed if you've got the CEO sponsorship. The existential crisis that banking is facing and the threat that has emerged, it's not evolving, it's now playing itself out in front of our eyes. So a transformation that is actually owned hands-on by the CEOs is where we have a role to play to get them on board. So those are my reflections from having seen successful transformation.
Very useful advice there, Sandeep. Any questions from the audience? No, I really love the way the last point was so critical, having the executive sponsorship, and that really makes or breaks any transformation, right? I mean, ultimately, if you don't have it, you just can't succeed, and if you had it, you will eventually succeed, right?
Yeah, it can't be a technology-led transformation. And Cedar has an unbelievable track record of being able to deliver on that, but I'm saying this having observed this play out many times over on what works and what doesn't.
Thank you, Sandeep. Any questions from the audience, please? I see a hand go up here.
So my name is Pankul. I'm part of Cedar. I'm principal at Cedar. First of all, I want to thank all the panelists for being here. So my question, Sandeep, is to you. While drawing the blueprint for the, let's say, the transformation for the bank, out of the ABCD criteria, what comes into place, what should be the top 2 priorities for the bank if they have to choose among all ABCD? What top 2 should be the focus to start with?
AI is absolutely fundamental to the ability to operate going forward. Which means I understand you. I even spoke about, we can't afford private banker for every customer. But every customer wants to be understood. And you can only be understood if you have the AI, it's the halfway home, it's artificial and not the full. It's the artificial intelligence that shows I know you, because personalization is going to be key, differentiation. So that's the first thing. So building that stack and capability. And number 2 is cloud. You cannot continue to drive on the railroads that exist today. You will fumble and tumble because you are still on the railroad and competition is flying in the sky. Right? They are literally in the cloud or the sky. But the point is, these are fundamentals, and since you forced to pick 2, I would say, and AI almost is forcing you to go to the cloud because the quantum compute required is just not possible on premise. Thank you.
Thank you, Sandeep.
I see a question. Hand go up there. Pass the mic there.
Hi, good morning, everybody. My name is Jerry from ADCB. Thanks all the panelists and thanks, Sandeep. Wonderful insight. Sandeep, I do understand that one of the primary requirement for the transformation is from the CEO to sponsor it or to direct it. But as a leadership role in the technological practice, the CIO, doesn't he need to form the landscaping for the transformation?
So, Jerry, technology, and I know you know this is a very complex business and changing every day of the week. Now the CIO, and having been one for many years, has got to keep their eye on the ball on that piece. And there are partners who are bringing unbelievable capability. So everybody has a piece to play in this. The CIO is the engine room. If you leave the engine room and you go into the cockpit, which is where the CEO is sitting, yes, they believe on. So the CIO plays a very crucial role on the top table in shaping the blueprint. Standing up and taking responsibility to make sure that the engine room delivers the RPM or the horsepower needed, because when the front office presses on the accelerator, it's the engine that needs to run. It's easy to press the accelerator. So they cannot be the keepers of the blueprint. And that's where we've got highly experienced people sitting here will tell you it goes wrong. Because the business landscape changes. And, you're Mashreq Bank, you're developing Mashreq Neo, and then Chetan will come along and tell you what Liv is doing in ENBD, and then you got to, but only the CEO can determine whether that proposition, those partnerships, the underlying revenue still makes sense. Also, in incumbent banks, the earlier point about the silos exist for a very good reason. The banks have a very strong fiduciary responsibility, and each of these silos performs that, and that's how the history of banking has evolved. And you know, everybody's putting the appropriate controls and checks in place. It's only the CEO who can weave through because if the the compliance person doesn't come to the party with the same passion that the CIO has, you're going nowhere. You can design the best customer journey that allows you to do an onboarding in 5 minutes, but if the regulatory piece has not been solved, then it will take 45 days to open the SME account, right? So that's where the responsibility is. And the point is, the CEO needs to understand it is now an existential issue. You can choose to ignore it at your own peril. Thank you.
Thanks, Sandeep. Very important and I think useful insight. Yeah.
Hi, Sandeep. This is for anybody on the panel. Sandeep, my concern generally is that sometimes in this urgency to innovate, are we doing too much of it? And if I reflect on, say, if I have apps from US banks in the US, JP Morgan, Chase, for example, and if I look at those apps every day, over the years, I'll notice an increased amount of personalization in terms of what they're trying to sell me, often fairly subtle. But the basic transaction parts of it remain fairly stable. In fact, they'll not even play with the fonts that much. There's a consistency there, but there's also personalization. And then I met another bank CEO in leading bank in UK last year, where they were doing 400 updates to their app every month. And they were struggling in trying to manage that. So I guess the question is, where is the balance here? And then how does, whether it's the CEO or the CTO or the CIO, determine where the right balance is? I mean, is there a metrics or is there a way to figure that out? Because there's no end to this, right?
Yeah. I think, thank you, Sanjeev, for that. See, innovation cannot be measured, you're right. But any conversation on digital always starts with customer experience. It's just the nature of the world that we live in. The problem is, in the bank, I speak for the bank, making a slightly bold statement here, they don't know how to measure customer experience in the digital world. Banks just don't know that. They think NPS is the way to measure it. But NPS was designed like 40 years ago. So, the disruption is happening at such pace that your JP Morgan Chase application actually is irrelevant in the grand scheme of things. Because the only time you go to the banking app today is if there is a gross need for you to move money to someone. Other than that, you really don't want to go there. Because if you walk into an online store to buy a latest television, he's solving your lending need over there. If you go to buy a car, they're solving that there. You're buying an airline ticket, he will fix the hotel, the insurance, the payment plan behind that. So why will you go to the banking app? I'm talking as consumer and innovation. So the innovation is taking place in the experience of core needs of customers. People are going for a hospitalization treatment. People are going, so those are core needs. You're building a house, you're sending kids to education, and so on and so forth. And that's why the word embedded finance has emerged so much more loudly, because finance has now got embedded in the everyday needs. And probably the most easiest way to explain how the banks should think about it is, you are the blood in the ecosystem of whatever, the market. You are the blood, you move the money, but you are invisible. The patient should not be bleeding. The blood needs to keep moving, but needs to move super quick, but invisibly. And so I'm not sure if I've answered your question completely, but hard innovation is happening in those areas, and boards are having sleepless nights to understand how to deal with this competitive situation, and they can't see the way out. And that's why I was suggesting that that's the blueprint. In the digital world, the only metric that matters is STP, which is straight through. If it is not zero, if your transaction is not done instantly, you are actually not going to go back to that service provider. You can't go book an airline ticket, and today, Emirates will confirm it to you, not just confirm it to you, put the boarding pass into your phone. You could really be standing by the boarding gate and buy the ticket and board and get in. That's how instant it is on a flight, whereas, you and I know it was not too long ago, you had to call the travel agent, wait a few days. So, instant, I think banks don't understand this point. And they make like a million excuses to why things cannot be instant. And someone else is solving it. The grocery shop is solving it. The transportation guy is solving it. The food delivery guy is into banking. I can't just understand what's going on. The real estate guys are into banking. They're playing with crypto. And the banks are sitting on the side still thinking what to do. So innovation is really happening on the outside, and it's high time we wake up to that. I'll let my other colleagues here comment, please.
Yeah, Sanjeev, taking your own point when you started the opening session of where banks are expected to go into a marketplace. Banks will actually be part of the marketplace rather than the marketplace themselves, because end of the day, the role of the bank, like what Sandeep mentioned, at least for your day-to-day transaction is to move money. Beyond that, nobody else is expecting. If we were to look at 30 years back, the number of times we used to go to a branch to now where we don't even go to the banking app that often. So the innovation is certainly happening, and it's happening at the right pace. And the best element is to try and figure out as to what innovation is happening in one market and how do we try and replicate it in other markets. And that's where we see people like us playing a role. And taking the cue from what Sandeep mentioned, if we were to keep customer experience and the convenience the customer is looking for, at the core of things, that's where I think the innovation is happening, and that's what most of the fintechs are trying to solve. As much as we say that there are 465 fintechs, if you were to look at what problem that they are solving, they may be probably solving only 5 or 6, because everybody is mushrooming around the same idea, but it's not two different ideas. It's just the tweaking of one idea into a slightly better version of what the previous one have done. And taking your point of the CEO versus CIO piece, end of the day, it's the question of, if there is no senior level commitment, how much ever we try and solve our problem. And right now, if you look at larger banks, there are multiple, I would say, head of departments, right? Multiple CIOs. We deal with one of the largest UK banks. There are some 17 CIOs, depending upon, different technology, different business areas. And they are not able to figure out as to how they collaborate with each other. And that's where, the board and the CEOs and others, how do they make sure that you interact and engage, come into play as well.
Yeah, if I could just pick up one more point there. See, Sanjeev, you've been around, so you'll recognize this. The pharmaceutical industry, 25 to almost 30 years ago, went through exactly what banking is going through. The Pfizers of the world had massive research labs where they were looking at the various compounds to beat the various viruses. They realized that the innovation and research was actually happening in the universities and the biotech companies. And it's a board level decision to drop your own R&D and invest in the universities and these biotech companies. Now those biotechs in our world is called fintechs, and that's why and if you look at the last pandemic, it is, the Moderna worked with Oxford University and the other biotechs to come up with and likewise Pfizer. So the acceleration of the innovation is happening on the outside until the CEO and the board do not understand the significance of how to become a very, very crucial part of it and keep treating it as a piece of technology delivery. It's not going to get solved. Ivan?
Yeah, just to pick up on that, the change is happening, innovation is happening, you can't stop it. The question I get most when I talk to CIOs, CEOs, and CFOs as well is like, oh my God, but Ivan, this is massive, we have so many things, so many systems, how do we change all of that? And I think the answer is, progressive renovation and composable banking. Start changing components that you're missing to catch on, like AI. You don't need to change your core banking system to start using AI. You don't need to change your channel systems to be innovative. You can plug them in. You can add advanced fees, maybe with AI, to personalize things, and really look at which parts you need to change now and do it progressively. Come to us or our friends over there, say, listen, I just want to have a better module for this, or I want to have a better functionality for that. Go step by step. It's no need to do full heart surgery, but you have to do something, otherwise your cake will be eaten.
Well,
Thank you.
Thank you very much to Ram and all the panelists.